Welcome back to the second half of the Future Show here on the TD Ameritrade Network. We're less than 60 minutes away from the cash open for stocks on Wall Street. We've got Scott Bauer, the CEO of Prosper Trading Academy, joining us this afternoon to take a look at some this morning, I should say, take a look at some economic data and financial markets. Scott, good morning to you. Welcome.
Morning, Ben.
A busy week for traders. You've got the jobs report Friday, central bank activity globally. We were just talking about the spike in energies earlier. Well, indices, how they've been coming off all-time highs. All things considered, Scott, what's front and center at the top of your list? Focal points headed into this Tuesday morning cash open.
Couple things, Ben. I think it's still China. You know, we're starting to realize that it's not just this initial shock, the Evergrande, that there may be some deeper issues there as well. So I think the market is a little bit on edge if something worse is going to come out of there. And then obviously the geopolitical events that's going on there. So you kind of have that double-edged sword. So that's number one. Number two, obviously the entire marketplace is concerned about the commodity space, oil, other commodities, stagflation, whether this shortage of supplies that we're going to see everywhere, is it going to extend through the fourth quarter? So those are definitely front and center. Are they overdone? I don't want to say they're not a concern. They definitely are a concern. I'm trying to take advantage of it, quite frankly. I think that some of this volatility is probably here just for a day or two, and I think we back off. That's my take on it.
Scott, in terms of the dollar, it's remained relatively elevated. We've seen the yen come off recently. Some of the other foreign currencies you and I have discussed that have experienced some weakness amidst the strength in the greenback. I'd imagine some of the bid that we've seen is also tied to some of these concerns, the uncertainties, and just investors on the edge of their seats somewhat amidst some of the concerns you mentioned.
There's no doubt about it. I mean, the dollar is absolutely benefiting from some of the safe haven demand that you know, the worries ranging globally, not just here in the U.S., but globally, from stagflation to the U.S. debt issues, the Washington standoff. Mm-hmm. So I think that it's kind of the perfect storm for the dollar here. And, you know, we're seeing other currencies not as strong. And you know, the dollar did break through that 93.5 level, Ben, that all-important level you and I had talked about for seemingly the last year or so, traded up to 94 plus, retreated a little bit. But right now, all tailwinds are in favor of the dollar. How high can it go? I think it's going to have trouble getting through, you know, 95 area or so, but 93.5, and now could be support as it was resistance for the longest time.
I like that. Some levels to keep an eye on there as well, Scott. Much appreciated. And some of what's behind the bid there. If we could just pull the chart real quick, the hourly time frame really just says it all. And as Scott mentioned, the breakout up and through the 93.50 level, I think what's most impressive is how we're really holding up above that right now. So this is something to watch. Scott, I wanted to talk about, well, we mentioned the yen and some of the catalysts here behind the U.S. dollar. Oftentimes we talk about it being, again, a reflection of those other currencies. Speaking of, we've got some data out overnight that I wanted to take a look at. At the top of the show, we mentioned some mixed data out of Japan, kind of a similar situation in terms of what's playing out of Europe, it looks like. If we could just pull, we had the German composite PMI, the services PMI, which actually looks like a little bit better than expected. And I want to stress the little bit part of that statement because it was significantly below prior. The German composite and the services composite PMI came in around, well, above 60. There's some inflation data. We can get into that in just a second. But if we could just cycle through some of these numbers, I also noticed the Eurozone market composite PMI data, Scott, again, better than expected, but below prior. So this sort of speaks to what we've been seeing, though, in terms of Europe, as far as some of the really not a lot of directional conviction one way as far as the economic data pointing to recovery or real disappointment, and also the euro currency not really being the driving force here in terms of what we're seeing as far as the U.S. dollar. It seems to be, again, more weakness in the yen and supported by some of the other factors you already mentioned behind the bid in the greenback.
We're almost seeing a carbon copy globally, at least in Europe, as what we are here in the U.S. And you mentioned Germany and the UK here. And those numbers, slightly higher than expected. Not as high as they had been, but
Yeah.
slightly higher than expected here. What that is a reflection of, Ben, is consumers are still paying, the highest prices pretty much of all time. You're seeing these sectors rising as fast as they ever have. And there's a lot of inflationary pressures here, both in Germany, in Europe, and it's a continuation of what we're seeing here as well. Slow down overall, if you will, from where we were a couple months ago, but still far, far in the expansion phase, if you will, not a contraction number whatsoever.
It kind of speaks to what we heard from the RBA, and this comes ahead of the RBNZ, Bank of New Zealand, set to announce this week as well. But RBA left rates unchanged at 0.10%, but they basically pointed to how the recovery efforts are not going to be a smooth path, and it's going to continue to be a bumpy road here. And certainly, again, interestingly enough, they had some data due out overnight, or some numbers as well that we can get into if we have time. But Scott, in terms of this economic data due out here in the U.S., a major focal point for investors, for traders, seems like, again, we're already kind of looking into the jobs reports to come. We mentioned a minute ago the inventories with energies playing a big part in this whole discussion, the inflation component tied to and everything associated with. But ultimately, it seems like everybody's kind of squarely focused on the jobs report. What are you going to be looking for Friday, and what should we be watching in terms of the release?
I think it's a little bit overblown at this point. I really do. I don't know that it's really going to impact what the Fed is going to do unless you see just some massive blowout number one way or the other. I think the forecast is right around 450,000 new jobs. So unless you get a number that's maybe a million plus, Ben, I don't think it has any effect whatsoever on what the Fed may do. So I think, yes, it's a big number. All focus is on this number. I think it's one that is not going to play into a big market mover. Going back to what you just mentioned about the RBA, isn't it like a rinse, wash, and repeat of what you see here in the U.S., outside of the fact that they said they're not going to raise rates, or they don't expect to raise rates till 2024. But their comments, boy, you would think that that's coming out of, Jerome Powell's book. They're committed to maintaining highly supportive monetary conditions. The setback to their economic expansion as Australia is expected to be transitory. Their wage and price pressures are subdued. It's right out of the playbook that you're seeing from the U.S.
Scott, I'm looking at the statement right now, and it really does speak to some of, as you just mentioned here. They did say they could continue to purchase government securities at a rate of $4 billion a week until at least mid-February 2020. And again, they left their target rate at 10 basis points. So, Scott, something to keep an eye on there in terms of the currencies. Last but not least, I want to just get your thoughts on Bitcoin, Scott, because it's been getting a bit of a bid recently. I'm not sure if you saw the comments from Citadel's Ken Griffin yesterday, but he basically said that he doesn't want to trade it until it's regulated, and he expressed some concerns about the fact that it wasn't.
Well, you know what? He makes a good point. However, isn't that what we've seen over the last few weeks or so, is that, it looks like regulation is coming, and that's a good thing for this marketplace. It's not a negative. And so I think that the whole crypto space, especially Bitcoin, has really embraced that. Now, is that the reason why we're up from, the 41 or 42 area to post or above 50 right now? No, I think the reason that we're up that high is that the news out of China that we've seen over the last couple weeks was a shock to the system, but it didn't destroy what was going on. It didn't really put the fear into the system that crypto's going away. So I think that the whales were buying during that time. You can look at all the statistics out there, and Bitcoin, in the face of everything that has gone on, or the whole crypto space, with everything that has gone on over the last few weeks, man, I'm not sure it could have dodged these bullets any better, Ben, and that's why there's a big bid here.
I couldn't agree more, Scott. It could have been quite the storm related to that China news, and it certainly weathered it very well. Scott, appreciate you joining us here. A great breakdown. Scott Bauer, the CEO of Prosper Trading Academy, helping us take a look at financial markets, and always a pleasure. Scott, thanks again.